Impala Platinum has confirmed that 11 miners have died in an accident at one of its mines near Rustenburg. A further 75 have been admitted to hospital. The accident happened when workers were being brought to the surface in a conveyance after their shift when it unexpectedly started descending. All operations at Impala Rustenburg have been suspended today. CEO Nico Muller has described the tragedy as the darkest day in the company's history. Southern Palladium has appointed former Minerals Council CEO Roger Baxter as its next chair. He will take the top spot from the beginning of 2024. The move comes as the junior Australian miner prepares to secure a mining right to develop a platinum group metals project in Limpopo. Baxter left the Minerals Council at the end of June after 30 years at the industry body. Southern Palladium's interim chair Mike Sturzaker says Roger's extensive in-country experience in South Africa will add depth to the capability of the miners' board. Stefanu stocks is still in the red, but its financial position has improved somewhat. The construction and engineering firm has narrowed its interim loss from continuing operations by 83%. That's as revenue ticked up just over 16%. This comes as the group is in the midst of restructuring its operations. To that end, Stefanu is looking to offload non-core assets, but it says this is taking longer than anticipated given current market conditions. The firm is also still locked in a dispute with Eskom. Stefanu is looking to recover money for services rendered at the state utilities Kusile power station. It expects a binding decision on this in the first half of next year. ArcelorMittal South Africa says 3,500 jobs are on the line. That's after it took the decision to put its long steel business into care and maintenance. That decision comes despite efforts to resuscitate the business. But weak economic growth in the past 7 years has led to a decline in steel consumption, and limited infrastructure spend and project delays have worsened the situation. The company says the country's energy and logistics crises, coupled with the ban on scrap metal exports, have also hamstrung its operations. Naac has warned of a steep decline into the red. For the year, the packaging group says its loss per share is likely to come in at as much as 1,178 rand. That's from a loss of 48.79 rand in the previous period. The plunge is due to various factors such as higher impairment and forex losses, as well as increased net finance costs. More detail will be available when Naac opens its books on the 4th of December. On the international scene, Rolls-Royce has vowed to deliver up to $3.53 billion of operating profit in the medium term by increasing the margin on its civil aerospace business to 15% to 17% from 2.5% last year, putting it closer to its rivals. Here's more detail in this package report.
Rolls-Royce is vowing to deliver a big jump in profits. The jet engine maker on Tuesday set a target of over $3.5 billion in operating profit over the medium term. To get there, it aims to increase margins on its civil business to as much as 17%. That would be a huge increase on the 2.5% seen last year and put it closer to rivals. Chief Executive Tufan Ergin Bilgic has been working on a turnaround plan since taking over in January. But he's just the latest CEO to try to tackle the UK firm's persistent inefficiency. It has long trailed the margins made by General Electric, its main competitor in the market to power big airliners. Ergin Bilgic called the new targets compelling and achievable. He says they will take Rolls far beyond any previous financial performance. The company also set out a divestment programme, aiming to shed around $1.9 billion in assets over the next 5 years. Rolls-Royce took a heavy hit during the global health crisis when many jets were grounded. That was a big blow, as much of its revenue is tied to how many hours airliners spend in the air. However, it has since benefited from a faster than expected travel rebound.
And since Western countries have put sanctions on Russia over the country's war in Ukraine, Moscow has had difficulties selling resources for money urgently needed to keep the war effort going and the budget stable. Here's our reporter Ndaleng Lechela with more of the detail.
You're absolutely right, Zinati. Now, currency clashes have made it difficult for Russia to trade oil with other countries. And joining me now with greater insight is Lars Halter with Deutsche Welle. Thanks for your time today. Lars, let's get straight into it. Now, we know that Russia is still selling oil, but what are the latest troubles on that front?
Yeah, thanks for having me. Well, the main problem for Russia is that it almost seems like they weren't really considering how they too depend on Western economies in many ways. Sure, Putin knew that with his war effort in Ukraine, he would risk losing his European customers and would likely have to find other partners to sell his crude oil to, or his natural gas for that matter, as he did, by the way, with much of Russia's oil going to China and to India now. However, the problem is that the oil trade has for decades been dollar denominated, and with American sanctions levied against Russia's trade, Moscow has tried to avoid dealing in greenbacks. But now the question is, which currency should they use? The problems really came up when India, which has become Russia's biggest buyer of seaborne oil, insisted on paying in rupees, and the trading activity nearly fell apart. That was after some informal guidance from the Russian central bank that the bank would not accept the currency any longer. The thinking behind this, the central bank says they're receiving revenue in a currency with little value outside India was, quote, pointless.
Now let's zoom into that. What is the problem here? Why isn't Russia just accepting rupees?
Well, the main problem lies with the government in Delhi. India encourages rupees to be spent on its territory and has imposed punitive exchange rates on converting rupees into other currencies, amounting sometimes to over 10% of the amount converted. And now, that wouldn't be such a problem if Russia would simply import more goods from India. Those could be paid for in rupees, and there would be a nice little back and forth that would be easy to process. But while India has been importing more goods from Russia, and that of course is mostly oil, Moscow has actually shifted towards China and brings in most of its imported cars and equipment and other goods from there and not from India.
Now, before I let you go, are there any solutions Moscow could try and put in place?
Now, there's been a bit of a workaround as of now, because Moscow came under tremendous pressure. That was after two major Russian oil companies threatened to divert a dozen India-bound tankers carrying up to 1 million tons of oil to other destinations if no payment option outside using rupees could be established. So as a temporary solution, the cargoes were paid for in a combination of the Chinese yuan, the Hong Kong dollar as a transition currency into the yuan, and the UAE dirham, which is pegged to the US dollar. Now, that's obviously a bit complicated. Also, because India is not the only customer with a currency problem, buyers in Africa, China and Turkey are also affected by all this, albeit at a lesser rate, as India is currently buying more than 60% of Russian oil. So they'll be working on this some more, I'm sure, but it's safe to say that the dollar won't be back in terms of trade in Russia, and that would be for two reasons. The Russian central bank cannot operate in dollars because of those sanctions, and while Russian exporters theoretically can use the currency, avoiding it has another advantage, because it would be making it harder for the United States and other Western governments to monitor their trade.
Let's leave it there, Lars. Thanks for your time and insights. That was Lars Halter joining us from Berlin.